Platinum Trident Limited, a subsidiary of First Quantum Minerals Limited.
Good evening. It's a lovely 2025 and a happy new year to you Diamond TV viewers. Those of you catching us on Diamond TV's DSTV 271 as well as on Go TV channel 20. We're streaming live on Facebook. It's Diamond Media Zambia as well as Diamond TV online. On YouTube, we're Diamond TV Zambia. Welcome to this, my first episode of Costa for 2025. Now, 2024 was rather a tough economic year for many Zambians, plagued by a natural disaster in a drought, obviously trickling down into an energy crisis, food shortages in some parts of the country that experienced floods, and of course, erratic power supply, the expensive cost of petrol and diesel, and a high cost of living. Many citizens are now hopeful that 2025 will indeed be a better year. But what are the macro or microeconomic policies that government, stakeholders and partners such as the IMF and the World Bank putting in place to ease this economic burden for Zambians? Now, the Oxford Economics Africa says that they have revised Zambia's 2025 GDP forecast to a below consensus 3.4%, citing the expectation of an unsatisfactory rainy season. Now, this contrasts with the IMF's projection, which anticipates Zambia to be among the top 10 sub-Saharan African countries for GDP growth in 2025, with a forecast of about 6.6%. Imgard Erasmus, senior economist at the Oxford Economics Africa, explains that an inadequate rainy season has compounded Zambia's economic challenges, including a weakening currency. Now, according to this report, he stated that the Zambian kwacha has recently hit a record low, largely due to a severe drought that has led to rising power prices. Joining me this evening on Costa is Dr. John Musantu, an economist. He joins me tonight on the second episode of Costa for 2025. We'll be back shortly right after this. Dr. John Musantu is an economist holding a PhD in economics. He holds a Master's of Science degree in economics and finance. He has vast experience in a number of areas, including applied economics, development work, and advisory. He is my guest tonight as we discuss Zambia's 2025 economic growth and what must be done to realize real growth. Dr. Musantu, it's a pleasure to host you and Happy New Year.
Happy New Year, Costa, and good evening, viewers.
Let's first of all, before we get to look at these reports that I've alluded to in my introduction, just an overview and really reminding Zambians what 2024 was like on an economic front. I know that one of the major highlights for 2024 in April was Zambia reaching that IMF deal and restructuring our debt portfolio. We've had a 2025 budget obviously released. Just before the year ended in 2024, government had to go back to Parliament to ask to borrow more money in form of supplementary budgets and so on. But let's get to hear from you as an economist how you'll describe 2024.
Thank you very much, Costa. I think 2024 was a troubled year for the country. I think we're just transitioning from, coming from the Ukraine conflict, the impacts, the adverse impacts of the Ukraine-Russia conflict, and also the COVID-19 adverse impact that we had experienced as a country and as a global economy. So Zambia was just trying to come out of that. And then, like you've said in your introduction, then we saw the drought. Now, the drought had quite an impact. It was a dual impact. So it impacted us on the energy side of things. As you may know, we are hydro dependent in terms of energy. So we're sitting at, I think, about 80% hydro dependent. So that meant that we went into this space where we have, energy deficit was, kicked in. But also that also then showed its face in terms of inflation through food inflation. So you see that the inflation, I think we ended at 16.7 annual, inflation rate. So, but I think the positive side was what you've mentioned, that government then, and we should commend them for this, then did seal a deal with the IMF in terms of, restructuring the debt. Another conversation around the homegrown deal, some circles within the economic space were talking about the homegrown deal, but from where I'm sitting, it was not practical. I think what government did, restructuring the debt, was the only pathway that we had in terms of trying to stabilize the economic ship. Because what we had was a tight fiscal space. So as government never had, the leeway to spend, to invest because of the deficit. So I think those were the highlights. But I think in summary, 2024 was a troubled year economically, and we're hoping that 2025 is going to be something different in a positive way.
It's the same conditions, really, just a change in terms of time cycles from 2024 to 2025. What really needs to change is the biggest question, and this is what we're really going to be trying to break down, tonight. For millions of Zambians out there, when you talk about things like the World Economic Outlook report, the IMF and the debt restructure, World Bank GDP figures, they believe that those things are really in what you may term the higher or macro issues. Many of the people in the Zambian private and economy are sitting at the micro level. Now, let's pick it from the fact that, yes, in 2024, Zambia did strike debt restructuring with, the IMF. Let's break it down for the ordinary Zambians. Has this deal been beneficial to Zambian? What is the significance of this deal? What impact has it had?
Yeah, very good. And I mean, that's the question that everyone posed. But I think when you look at the deal, what it did basically is, one, first of all, it cleansed us. Because before that, remember, in August, we had defaulted, right? So basically, our credit worth on the global market was quite bad. But also in terms of the fiscal space as well, in terms of our spending, of course, we're still repaying the debt. But I think it's repositioned us in such a way that now we are a country worth dealing with. So if you think about investor confidence, now that we're in that good space where we are not defaulting, we've gone back to repaying the debt. Now we're in good books with, we are in good shape with, the investors. So investor confidence is now back. And now also you're seeing, this is why, because one of the critical sectors within Zambia is the mining sector. Now, in the mining sector, you need huge investments. Now, for you to attract those huge investments in the mining sector, you've got to be a country that has this global foreign recognition and respect. So what the IMF deal did was basically this cleansing. But there's a debt to be paid. And this is why, as a country, we need to be very prudent to make sure that, because what we've done is that we've eaten part of the future cake. So what we need to do now is to make sure that we position ourselves in such a way that we invest and we have policies that are going to ensure that we pay back this debt and not take away so much from the future generation. So I think, in summary to your question, I think what the restructuring of the debt has done is to bring back the confidence in us. And this is why you're seeing there's quite a bit of traction in investments in the mining sector.
Talking about this debt, there's what one may say current debt, and the latest figures that Finance Minister Stumbeko Msokotwane gave us in the last quarter was that we're sitting at around 14.6 billion US dollars under the UPND government in terms of external debt. And we've got past debt that was obviously incurred by the previous administration. If you look at things like the Euro bond and other multi or bilateral, debts, there's always this question of where did this money go? Because like you rightfully put it, it's like we've eaten the cake in advance. Now, this debt restructuring is, according to government, is sort of giving us leeway or leverage to sort of stagger this, debt. Obviously, we've restructured it to be paid in smaller amounts over a longer period of time, giving us more room to spend on social, services. The biggest question is, are we now targeting resources into the right areas that bring about productivity to steer back this economy onto a positive trajectory?
Yeah, I mean, that's a big question, and I think this is why yourselves in the media are very important. You're a major stakeholder in terms of holding government accountable. But I think also one thing I should mention, I think this partnership between the government and the IMF, what is done is that basically in terms of flow of information, I think you appreciate that there's been quite a good flow of information in terms of disclosure by the government. So I think that's one benefit that you get with, government partnering with the IMF. Now, going back to your question in terms of are we then investing in the right areas, that's critical, right? Because there is a debt to be paid. It's not been forgiven. So therefore, we've got to make sure that we venture in the right spaces. And I think one area that you see is the energy sector. The energy sector needs lots of investment in there. We've got to then make sure we switch now into, the energy mix has to be, switched. We need to then dismantle the biasness towards hydro, and therefore I think one area that is very important is investment in the the energy sector. We need to go solar, and I think government has mentioned some plans of some plantations, some solar plants that have been that have been opened up, developed. But I think there's more to be done in that space, and I think via ZESCO as well. So the government should invest via ZESCO to make sure that we then move away from the skewness in terms of the the energy sector. So that's one area. I think if that's where we're taking the money, that becomes very important. And I think another one is opening up the road network. I think that becomes very important. So if we're taking our monies via those areas, then that becomes a viable venture. Agriculture as well, because if you talk about, I know you like practical, not theoretical solutions, or so one area that is really nagging the country is the cost of living. Now, the cost of living is emanating from poor production of, food. So the agricultural sector is a very important sector that we need to then make sure that we invest in. Right targeting of the subsidies, we need to ensure that we do that. But also, I think one area, I think in the short term is, social protection. We can't run away from that. So you can't just think about promise people, the Jerusalem and then not give them something in the short term. So social protection is very important, and I think that's one area that we need to spend more money in.
I'm glad, Dr. Musantu, you talk social protection, because on one hand, you can project, have a budget, and we'll be coming to these projections of GDP, whether it be 3.4 or 6.6%. But on the downside of it, climatic changes and these disasters are real, and they come to that issue of social protection. In 2024 alone, we had to spend in billions of kwacha. The president declared a national disaster. He went onto the global stage to appeal really for help, because to feed 6.5 million people that were hunger prone, we were almost talking about 23 billion kwacha that we were looking for, that was not even part of our budget. When you look at the weather projections just right now, we are told that there's flash floods with, Cyclone Dikeledi and things like that. So in some parts, there'll still be sporadic droughts, and in some, flash floods. How are these disasters and the amounts of money we are spending on disaster and social protection drawing us back towards productivity within the budgets? How are we playing the balancing act?
Yeah, and I think it's a difficult one. And I think when you look at the IMF of old, I think they had this sort of perception and idea that, you can't then invest in, or you can't put monies in social protection. But I think there's been a switch in strategy, and I think it's a good thing for Zambia. So you've seen, like you've alluded, you've seen investment towards social protection. Now, the idea is that if you look at the Zambian economy, you look at the Zambian citizenry, most of them are poor. So I think we're sitting about 60% incidence in terms of poverty. So it's not realistic that you can then forgo or put that aside in terms of social protection. So it's a very important aspect. But the most important, or one angle that is also very important, is investment, because then to sustain that, you've got to make sure then that you're being productive. And I think this is where now it comes in terms of revenue, domestic revenue mobilization. And I think this is where the government is now becoming a bit aggressive in terms of resource mobilization. So the idea is that we need to raise money within the domestic economy. But also that is a delicate dance that you need to play, because then on the one side, you need to grow the economy. And I think the idea is that government can only go as far. So if you look at how much employment government can create, it's quite limited. And I think the government has now reached a ceiling in terms of how many people they can employ, the job creation. So jobs are going to come from the private sector. And therefore, I think the dance that we need to balance now as a country is a balance between taxing, the private, our private entities versus, growing the economy. So I think that delicate dance is going to be very, very important. But also, as we do that as well, we've got to take care of the people that can't, that are vulnerable. So I think it's those 3 points that are, in 2025, as a country, if we're going to be successful, we have to balance them out as we go on.
Let's talk about these jargonic issues on the global economic stage. The IMF, in their World Economic Outlook report, projected that for 2025, Zambia would be hitting 6.6% in 2025. A bit shocking, really, or surprising from a layman perspective, because last year we had to degrade our GDP projection owing to the drought from almost 2.3% to below 1%. So the question is, how do we jump from minus into 6.6%? Because even if you look at where we were in 2021 when the UPND took over, we've been swimming far below 4% as a country. We were only hitting 6 to 7%, I think, under President Levi Mwanawasa then. So how possible is it? On the contrary, Oxford Economics Africa says no, the focus should be below 3.4%. Why should we have these conflicting figures? Who is seeing what from which economic lens?
Yeah, I mean, I think that's quite interesting. I was in Parliament when the Minister of Finance, Dr. Honorable Stuboko Msokotwane, pronounced that we project that will be growing at 6.6% in terms of GDP. I think it's an ambitious number, I should say. And I think after having looked at what the IMF and the Oxford Economics Africa considered, I think I'm splitting the baby. And I'm talking about maybe somewhere around 4.5 in terms of GDP growth. 6.6. I mean, you can have a conversation around what kind of sectors do we anticipate are going to contribute towards that 6%. So maybe let's start with the mining sector. So if you look at the mining sector, I think there's some traction in terms of mines coming back. So we have KCM, we have Mopani, Lumwana is planning on expanding, and you've got a few others that are in the conversation, Cobalt, and you have the Luansha mine, which is they're draining water there. But I think for the most part you find that our mining sector is not going to be in full operation or at optimal operation this year. I think there's going to be some increase in output, but it's not going to be optimal. And therefore, I think if you're looking at the mine to be the major driver of a significant contribution from that, I don't think it's going to be that much. Last year, I think it contributed about 11% towards GDP. So I think it will be too much of an ask to say it should be going in terms of contribution towards 40. I'm anticipating there's going to be some increase in production, but it's not going to be that much to drive a growth as significant as 6.6. Agriculture as well, I think, like we alluded at the introduction, what we're saying is that the drought has been quite impactful in a negative way in terms of contributing towards GDP. We see production going down. Maize production, for instance, went down 24%. Down. CDF as well, I think, is going to be one anchor in terms of growth. As you can imagine, Zambian economy is quite informal. And I think, therefore, the game changer, which we've not really maximized on, is the CDF. CDF is going to be the game changer, but I think it's had these sort of bottlenecks in terms of its traction. And last year, I think 2024, we're sitting about 50 to 60% in terms of utilization. So we might see some traction there. But also, I think one area that in terms of the small business, I think there's been some organic adaptation, because now if you go to a market, I was in Ndola, I'm born and bred in Ndola, and I went there for a haircut. You find there's this gentleman with a rechargeable machine. He's using a solar panel to charge his battery. So there's been some adaptation in terms of adapting to climate, climate change. So all those were entering 2025 in a different space than we did 2024 because we've learned quite a bit. And I think, therefore, there's going to be some growth coming from the, the mining sector, agriculture, not so much, maybe CDF implementation, the energy sector, hoping that, we have some, some initiatives kicking in. But I think that won't give us a 6.6 GDP growth rate. So I'm splitting the baby to
It won't give us
4.5.
6.6. Yeah. You are settling at 4.5%. But here is the real crux of the matter, Dr. Musantu, because whether 6.6, whether 3.4, 4.5, like you put it, for the ordinary viewer this evening, I think 4.5% of this animal called GDP doesn't really matter if the cost of millimil is still above 300 kwacha for a 25 kg bag, if the cost of transport is going to be triggered by expensive fuel price that is reviewed every month, hovering around 32 to 34 kwacha, per litre, that triggers obviously production costs, to get high. If inflation is still high, which means the cost of basic commodities, JCTR and the basic needs basket say for a basic family of 6 in Lusaka, you're talking of around almost 10,900 kwacha. Civil servants last year were only given, for this year, an increment of only about 500 kwacha. So there's no disposable income. Despite free education, the cost of living is high. The cost of doing business is high. So what's the significance of this 4.5% GDP growth if there's no food on the table?
Yeah, and I mean, that's a very, very important question. And I think this is why, theoretically, I think we say GDP, if it does not translate to the ordinary person, it does not improve the well-being of the household in Ngombe, does not mean anything. Because, I mean, also the idea is that especially if you are, depending on areas where funds can be externalized, for instance, the mining sector, of course, government has some stake in the mining sector, but a huge proportion of that is external, and it might be externalized. There's that chance, right? So you might end up with a GDP that's growing, but then there's no improvement in the well-being at the household level. And this is why I think eventually, once the economic ship has stabilized, we can't run away from subsidies, and especially on energy sector. So if you look at the fuel subsidies, those are direct and indirect. Because when someone direct, because then the bus fares will come down, production goes, the cost of production goes, goes down, and therefore you see it in the food prices. That's indirect. So eventually, as a country, we need to then go back to subsidies. We've got to introduce back the subsidies. But I think being fair to the government, the time they came in, it was quite a tight space. The fiscal space was very tight, and therefore you couldn't sustain having subsidies. But I think also the one I mentioned, the CDF. CDF is a vehicle that then can help, livelihood, living conditions at the household level. Because if you look at CDF, it's going across the country. Because I think previously we viewed the country as Lusaka and these urban centers in Ndola and, Livingston. But I think with CDF, the increases, I think now we're sitting at 31.6 billion in terms of CDF allocation. So that's going to be a game changer, but we've got to utilize it.
Let's get back to and go deeper into the energy sector. And I'd like to take, first of all, issues to do with fuel for a start. Previously, there were subsidies, and when this administration came into office, they said the true pump price was not reflective because government was chipping in, and so they were intervening in between the oil marketing companies, or MCs as they are known, and the suppliers. We're told government is owing in excess of over $800 million from previous, oil shipments. So subsidies have been removed to reflect the fact that private OMCs now import finished, petrol products into the country and sort of hold and dictate the pricing. We've seen sporadic shortages here and there. Indeni has had its fair share of problems. There are issues again with the Tazama pipeline that are trying to be cleaned. But again, diesel is being imported through the pipeline, and obviously in terms of stock, there's more diesel than petrol. With the current situation, that also brings us to the monthly review. What is your perspective? Should subsidies be reintroduced? Would this help ease the cost of doing business?
Yeah, absolutely. I think like I've said, I think when the government came in, I think it was unsustainable. I think they had $500 million, I think, in arrears that needed to be paid, and we had a debt that was, for restructuring, that was a burden. But I think now moving forward, but it's also it's a timing issue, cost as well. We've got to make sure that we can afford the subsidies, right? So energy sector is just one of the forms of subsidies. I think we've talked about, they've put in, cash for work, and, they've increased the numbers of people on social cash transfer. So that's expenditure. Basically, that's not giving you a return.
It's consumption.
It's consumption,
you cannot
basically.
sustain that.
Yeah. But I think ultimately, when the mining sector comes to a party, we've got to make sure that we bring back subsidies on fuel especially. And I think the argument was around targeting. We've got to make sure we find an efficient way of targeting that. But as an economy, we can't run a country without subsidies, especially in the energy sector. Everywhere else in the world, I think the Americans, in the UK, there's subsidies basically in the energy sector. So we've got to make sure we bring that back. But I think the big question, Costa, is when can we do that?
Earlier on, you alluded to where or how the Ukraine-Russia war triggered all this. It seems to be ongoing, and obviously the disruptions in the Middle East. Now there's Gaza, there's Israel, there's a lot of bulk buying. There's now also geopolitics at play with Saudi Arabia, Russia, India, and the BRICS coming onto this economic bloc. Shouldn't we as a country then be looking towards future energy, and when I talk energy, I'm still talking about fuel, future energy sustainability or stability? There's been talks so much about exploration in Zambia, but if there can be oil in Angola, why can't there be oil here? A pipeline between Angola and the Lobito corridor, the issues being discussed. Shouldn't we be looking for a more futuristic solution? Are we moving at the right pace? Do we have a plan?
Yeah, I think that space is not yet explored. In all fairness, I think as a country we haven't done so much work in that space. And I think we've done one, or it should be ongoing, in terms of geo-mapping of where the minerals are sitting. And I was hoping that maybe part of that geo-mapping would include things like oil and other things. But I think also strategically, the point that you bring in is strategically, how do we transition? Because now you know that in future, basically, it's not going to be about oil. So you've got EVs and you've got these batteries coming in. And I think where Africa has been lacking is basically there's this concept of economics of fortune tellers. Where Africa lacks is basically that we never foretell the future. And therefore, we just jump on the bandwagon, and we jump on it very late. So if you look at climate adaptation, Africa has not been driving the conversation, because if you look at other Western countries, they've quite advanced in terms of, batteries, in terms of EV vehicles and things like that. So when you talk about the energy sector, I think for me, it's basically how can we then use our resources that we have, not provide them or give them out as raw materials, but basically use them to drive the energy agenda, because there's so much that you can do, and that's where the world is going. So I think for me, I wouldn't even go your path of trying to still hold on to oil, because this is going to be an odd conversation. But I would say, can we use our resources? Can we use our cobalt, our copper, and drive the conversation on energy in terms of batteries and
But do we see policies that are steering towards that? I hear the Ministry of Commerce saying there's partnerships between the Democratic Republic of Congo and ourselves. The Americans are interested. That's why you mentioned cobalt. The Chinese are also interested. Are we strategically and safely positioning ourselves not just to be a receiver or ripped off of these raw materials? You say you were coming out of Ndola, and we're told there should be battery assembling plants coming up. Are we seeing this happening on the ground?
I think, if no fairness, if we're being just very objective and hard with ourselves, we haven't done a very good job. I think at the start of last year there was this conversation on partnering with Congo in terms of trying to make sure that our raw materials are not going out as raw materials, but we basically do the manufacturing of the batteries within, or at least some parts within our two countries. But I think that hasn't come through. And I think this is a problem that we have, because now I think the focus within the country has been ramping up production in terms of, copper production especially. So we're talking about the 3 million metric tons by 2031. But I think what we are losing in that conversation is, can we reduce the proportion of the copper raw material that goes out of this country by then turning it, adding value basically, right? And that's the conversation which we are losing. Because remember, Costa, this country has experienced, high volumes of copper production. We've experienced, high returns from copper. But then, alas, we're not very strategic in the way we use this. So this book is an odd playbook that we're using. If we're not then going to value add, and I think value add, low-hanging fruits, I think, is where the world is going. Basically, the battery production, I think that's a space we need to be in.
I'll be coming back to that, but let me get to what you've just touched on now, the issue of, of mining, but in relation to energy. The Ministry of Mines for 2025 has projected that we should be able to ramp up output with activity coming through back at KCM and at Mopani to about 1 million metric tons of copper production. The country was sitting at almost 600,000 in the previous years. You're right, we're projecting 3 million metric tons in 10 years. But the question that begs is, how feasible is this? Because the more mining projects that come on stream, if KCM is at full capacity, if Mopani is at full capacity, Kalengwa has been opened, the Munali nickel, you've got cobalt now, they'll all require power. And ZESCO, despite having its 3,600 megawatts capacity, if it rains well, is in a deficit. We're now sitting at below 1,100. They've got debt issues. They've got IPP issues with Mamba and other suppliers. CEC supplying power to the mines also has all these court. So do we have enough power to support growth in the mining sector to hit these targets?
Yeah, and I think that's where it becomes a bit tricky. I think even with the 6.6 projection, I think it's that. Because one of the assumptions that we are making as a country is that we're going to get quite a ramp up in production from the mines, especially in the copper, in the copper raw material. So that becomes problematic. But I think also there's been conversations on, can we allow the mines to import electricity on their own? So that becomes their burden basically. I think that's not a bad consideration to look at, that these mines should then go out there and have contracts.
But that's a short-term measure, not so.
Yeah, but I mean, if because you can't. I think the energy sector is quite it's got so much inertia, so much friction, right? Because even within ZESCO's capacity, there's nothing they can do to give the mines power, given the conditions that we find ourselves in. Of course, there's conversation around solar plants, but I think those are long term. But even them, they won't be able to then feed the optimal capacity that is needed to run these mines. So as a short term measure, I think there was a float of can the mines then go out and outsource their own electricity? I think that wouldn't be a bad idea for a short term intervention.
What sort of policy or developmental incentives when investment is being done probably should be given? I was seeing a story, I think 2 days ago, where United Capital Fertilizer are investing in about 45 megawatts of power to power their fertilizer manufacturing plant. They will be using, I think, just a chunk of that. The rest they'll be putting into the grid. Dangote Cement, I think, has their own power within the plant. Shouldn't we be going this way? I mean, sometimes when you look at even the multi-facility economic zones that we're putting up, you're trying to attract investment, but what is the water supply like? What is the power supply like? Because we don't think about all these things. They should be roads, they should be power for me to run a fully fledged factory. We only look at the bottom line, that this factory will employ 2,000 people, yet there's no power, there's no water, there's no roads.
Yeah, and I think you're right. And I think that's the problem that we have, and this is a wider problem. Even when you look at the residential areas where we live, you buy a plot, there's no water, there's no electricity, but the council can easily basically bring you the poles, the ZESCO poles, they can easily bring you a sewer system, they can easily bring you water, and then put a markup in your plot. And people are willing to pay for that. But also that then cures the issue of water management, which we're going to run into because we have a very reactive country. So very soon, of course, the conversation we're going to be having is that our areas are going to be running out of water because we're sinking boreholes, each one of us. But that's not the conversation today. Now, to your point, so basically when these, investors are coming in, that's some of the things that you might, want to incentivize them in. You give them, an incentive to set up their own, plant where they can produce their own electricity, right? And the surplus is then given back into the main grid. So that can cure the issue as well. But I think like you are saying, all we are doing is that you give someone land. Basically what we do is we give land, right? But the infrastructural side of the conversation is not really addressed. And if we're going to be a bit more systematic as a country, we've got to then start thinking about those things. Because if you talk about the Dangotes of this world, they've got the money to invest. Right? And if you think about it strategically, even giving them some sort of a tax waiver of some sort for a certain period of, time, for them to come up with a plant of their own that feeds the surplus into the system is worth it if you think about the adverse impact that comes with the deficit in electricity. So you've got to think outside the box in terms of the interventions and the policies that we're coming up with as a country in the energy sector.
One of the challenges that one would observe is that institutions, for example, like ZESCO and serious economic sectors like energy, instead of purely being looked at from a strategic economic perspective, have been treated with a political perspective and lens. What do I mean? It's always an argument that previous regimes did not invest. They also argue we invested and we grew capacity. Appointments in ZESCO, whether they are professionals or not, they're politically aligned and so on. So in its current status quo, ZESCO has a strategic plan, but they need to move forward to align to all these projections in terms of GDP and, copper production, and so on and so forth. But like you say, we cannot be dependent on hydro. Are you comfortable as an economist that as a country we're taking the issue of energy diversification seriously and at the right pace?
I think you talk about very key, and I think I've always been arguing, I'm writing a book about this. Basically, the argument is that the strength of your economy, Costa, is just as good as your institutions. So in economics, we say your macro is as good as your micro. So what we have in the country is that the most cleaning up that we need to do is basically our institutions. Make them professional, make them, effective. And ZESCO is one such institution, and you're talking about whether it's entangled in politics. I think where it becomes tricky basically when you come to ZESCO and the politics is basically the incentive structure of politicians, right? Because if you say market reflective, pricing, tariffs, that touches on the politics side of things, because then there's going to be an outcry from the country in terms of we can't afford this. So I think basically it's how do we ensure that we allow these institutions to run with their agenda, right? But also it's what's the right time at which you do that. But also are politicians also sacrificing? Because I think the problem has been where the community or the country sacrifices and then politicians don't sacrifice. I think that has been the problem. But I think we need to make sure that our institutions are being run efficiently. For instance, if you look at ZRA and what they're doing, last year they hit the target in terms of their target. This year, I think they've been given quite a huge target. I think about 174 billion kwachas to raise. So I think running the institutions and letting them run efficiently is what is going to make this country, a big country and a sustainable country.
But still on the same, the issue with ZESCO has always been around the cost of service study. We really don't know how much it takes to produce a kilowatt of electricity and how much we should be charging. Then the tariffs have not been attractive for incentives. Tariffs have been adjusted. ERB has approved this. More recently, an emergency tariff adjustment was done. Just last week, we saw even the aspects of net metering. But like you said, we seem to be a knee-jerk, reactive, country. Climate change and drought has hit us. There's an upsurge in demand for solar. very little regulation and know-how around solar. There's now an upsurge in demand for cooking gas, very little regulation and know-how around it. We're now talking net metering, that the more people have solar, we feed it into the ZESCO grid. Are we ready for that?
I don't think so. I think that's a big issue that we have as a country. I think if only we can then be fortune tellers of our own destiny, right? Where do we want to go? Right, and not firefighting, because all we do is basically firefighting. Net metering is a very good initiative, but of course you need the right inverter, for instance. But all that information has not been put in the, out there in terms of understanding what you need for net metering. So
do we even have targets, a sample group of the economy that we're using as a test pilot for all these things?
Absolutely, all those things, right? So even when you talk about the right inverter, for instance, the right parts that you need. Do we have, those samples? Do we have maybe companies? Can we set up a company within Zambia that can be, manufacturing those inverters within the country? Give them incentives. So it's that kind of a conversation. So we have all these very brilliant policies, but then the enabling factors are never embedded in the argument. So the policies that we come up with are very brilliant, Costa, I should tell you, because even like you were saying, just from the 3 million metric tons that we project, an enabling factor is going to be ZESCO, electricity, but that has not been factored in. So I think moving forward, what we need to do as a country is basically embedding these enabling factors within the interventions, within the strategies that we are coming up with. So I think in terms of in the energy space, I think we've got so much to do. I think we just so much focused on the solar side of things, and these other things have been neglected.
Let's get to zero down really on small businesses, because out of a population of 20 million, people, over just 1 million are in the formal sector, employed by obviously government and the formal sector. The rest in private sector really are SMEs or whatever you may craft them to be. Now, the biggest challenge, and I'll try to get from you, the economists. Are you really practical people or theorists? You have a bias and experience towards advisory. How do governments listen to you? And where I'm coming from is this. From 2020 per se, the global economy obviously suffered a recession due to COVID, those 2 years. For Zambia, from 2020 down into 2024, it's been COVID, then cholera, then drought. So we've never recovered. And it's a world of data science now. Have we been able to really tabulate how COVID, how cholera, how now the drought has impacted our economy? How many have been disturbed? Because companies have closed, people have lost jobs, and very little stimulus plan or even a recovery plan way after this. Have we done an audit of this?
I think there hasn't been. And, I had a conversation with some partners from outside who are working in the climate change space. So one of the things that we haven't done is what we are saying, simulation of basically what has been the adverse impact of climate change and all these shocks in the market that you've talked about.
But this is very important.
Very important. And but that's the other larger part of the conversation, Costa, in terms of research and development. As a country, I think we haven't yet pumped in and considered this as a key piece. And it goes back to what I was telling you about economics of fortune tellers. If you're going to be a fortune teller basically of your economy and your destiny, you've got to make sure you have the data, you have the information. Where are you getting that from? You're getting that from research, innovations and things like that. So if you look at even just your public institutions, the University of Zambia and Copperbelt, Mulungushi, they're not very well funded in terms of research, because all those things they're talking about should be left to researchers and academia. The government shouldn't be involved in that. They are consumers basically when it comes to that. And also I think that's where also the university structure also should be basically reconsolidated.
So where are people like yourself, Dr. John, PhD, masters? What role are you economists, playing if we don't have this information? Because for me, as a citizen, it worries me. We're a country shooting in the dark. You have an energy crisis. The next thing we do is go and buy big generators for markets. The next thing, there's not enough fuel to put in these generators, and ZESCO says the cost of fuel is too expensive. These generators now are more like fossils. They have no diesel. When I talk about the impact, are we looking at whose barbershop closed, whose barbershop has diversified? Are we looking at the impact in terms of how many people have been sent home? I mean, it's appalling to say the least that even when we say there's a policy directive that government as a machinery must go solar, you walk into a government department, people are not working. They can't give you services because there's no power.
Yeah, absolutely.
So loss of time, loss of productivity.
Yeah, absolutely. I think implementation is, I think, what eludes us, basically. But when you say where are the think tanks, where are the research institutions, I think we've got to be a bit more serious as a country in terms of funding. But also, I think you've got to have governments that are listening to technocrats. I think the issue has been the incentive structure of politicians sometimes does not allow them to do the things that, you know, are long-term, they're difficult, they're painful, but then they're going to give you sustainable outcomes, sustainable growth. And those are things that technocrats are going to recommend to the government. So I think moving forward, what we need is to have listening governments. But also I think this is where I was having a conversation with a friend on the tenure of the presidency and, you know, the politics in the country. 5 years for an African country is a very difficult space to be in. Very soon, it's only like yesterday we had elections, 2021 elections, and now we're going to have another, you know, set of elections. So I think the environment as well does not give space to the politician, does not give them, therefore, an incentive to make sure they do long-term projects, because for the most part, politicians will always be politicians on average. They're always focused on what wins them an election. So there's this structural incentive structure within society, within the electoral process that we need to then take care of if we're going to have a system where technocrats are listening to, politicians are doing what technocrats are doing, the country is investing in long-term you know, projects and interventions. We've got a long way to go as a country for us to achieve that.
Earlier, Dr. Musantu, you alluded to the fact that this IMF, you know, supported project and restructuring was, we argue it's a homegrown, and there've always been this debate whether there's a new IMF and an old IMF. I would rather describe it as the famous saying of, is it a sheep in a lion's skin or something like that? Why do I argue in this way? We know that, you know, partners such as the IMF and the World Bank have been very instrumental in this restructure and very instrumental in supporting the work that entities like the ZRA are doing in their tax collection. You commend them. Last year, they had a target of over 135 billion. They surpassed that. This year, 165 billion. But 165 billion kwacha to collect from rather a very limping economy that you project at 4.5%. Your balance of payments are not balancing. You've got a trade deficit. You're importing more than you can export. You have a power deficit. You have a high cost of doing business. Your lending rates are at average 28%. Your exchange rate is at 28 kwacha, you know, on average. And then now you release a non-consensual budget for 2025 when people have to diversify into solar, and just the business environment is bad. Is that a homegrown solution?
I think, Costa, in terms of, I think it's a difficult one when it comes to, because on the one hand, what you don't want is the government to keep on borrowing and, you know, at a higher rate, right? And then on the other side is basically you're saying we need the private sector to thrive. So in between here, the question that begs to be answered then is, where is the money going to come from to fund government operations? You and I spoke about social protection. We need money for that social protection. We have a debt to pay. Government has a wage bill that they need to take care of. And therefore, I think the issue then becomes, how do you balance these things out? But I think the targets that ZRA has been given are going to be, they have to work, they're ambitious, right? So they've got to work very hard for them to attain those. But I think rightfully so, as painful as it may be, it has to come from within the country. You and I have to shoulder that. And I think one area I think that has been very difficult for ZRA is basically the informal sector. I think they haven't come to the party, if you're being honest. So it's the formalized institutions and the workers that just shoulder the burden. So we've got to then increase the tax base, as it were. But I think the problem has been basically the cost of enforcement and how much return you get has been low over the years. So it's the cost-benefit analysis does not add up. So therefore, what they want to do is basically now go into, can you introduce CCIT into this conversation?
Paying taxes is low and it's a good thing. But when it becomes a barrier or a hindrance to doing business, that's my concern. There are issues now introduced like on your $2,000 remittance on a personal account or on a corporate account through the banks now, you need to produce a tax clearance certificate. If not, you're penalized with a penalty of 15%. Is this really fair? There's a 17% tariff now that has been slapped on internet. We're now in a digital world. On talk time, tariffs are going high. On betting, it's taxation. Mobile money transactions, you the sender, the person transacting the vendor, that was a bit of a source of employment for many of our youth. There's now a charge on that. For you and me to get a driving license, there's all these taxes now embedded. My issue is, it's the same Costa, it's the same John. I'm paying my rent. There's a property, tax there. I'm buying my internet. I'm buying my talk time. There's VAT on every product that I'm purchasing. Are we not squeezing too much from this cow that really does not even have the nipple to produce milk?
Yeah, and I feel, to the viewers out there and you, I'm also a taxpayer and I feel it. I feel the pain. But I think the money has got to come from within. Right, so we've got to fund and fund ourselves sustainably, because that's the argument we're making, all of us, that we shouldn't be getting money from outside. Let's look within ourselves. But I think to your point, moving forward, if you look at Scandinavian countries, the taxes are very huge, but everyone in those countries pays the taxes with a badge of honor. Why? Because one, the facilities in terms of healthcare, education, the road network, those things are provided for by the government. So I think the citizens need to be given an incentive. They need to be taken care of by the government through this high...
But which is exactly the opposite, because we are taxing Zambians heavily, and much of that money, a larger chunk, is going towards debt repayment.
Yeah, but that's a debt that we incurred, Costa, you and I, through the government that was representing us. So basically, I think we've got to... for me, I'm more concerned about moving forward and what we do to hold governments accountable. Yeah, but so as painful as this may be, we've got to then make sure that moving forward we're holding,
the point, Dr. John, I'm trying to make here is, are we not taxing the small businesses that, when amalgamated together, these are what will form the larger part of a thriving economy? I believe that this government is not incentivizing them enough. What policies or stimulus have you seen? Because already the 2025 budget is non-concessional. Businesses have been knocking on the door of government and they've been told there's no tax cuts, there's no tax rebates, because we've committed to the IMF. So where does a business get a breather? How does a business grow?
Yeah, it's going to be, I think the next 2-3 years, Costa, if we're being honest with ourselves, are going to be difficult years. We've got to go through this painful way. And I'll tell you about some of those challenges that you're seeing, for instance, talk time and all these other things. The challenge there basically is the informality of the system. I was laughing with my builder the other day. I pay him, and for him, that's net money, right? It's not tax for him, right? So if you give him a 50,000 for building a house, for him, that's a net. For me, if I get a 20,000 either from consultancy or from work, I'm going to be taxed. So I think some of those things that you are seeing in terms of the innovations that are coming in the tax system is because of the informality of our of our system. So they're guessing when they start taxing how much in terms of the talk time transactions, they're getting some of that money from people that don't pay tax. So I think, to be honest with ourselves, Costa, it's going to be a very painful 2-3 years for us to recover, and we have to be very honest with each other. And I think the government also ought to just come out and put it out there to the country in terms of how painful this is going to be. It's going to be burdensome in terms of taxes, so everyone has to fasten their seatbelts as we go on this difficult ride.
Burdensome as it may be, I still come back to the issue then. How do you project then that the economy will grow at 4.5% if those that are supposed to grow it cannot even borrow within their own economy. The MPR last year was revised so many times in each quarter that the central bank gave its briefing. The president has been meeting private sector and the banks to say we need to make capital affordable. But the cost of money in this country is really astronomical. An average of 28%. If I'm borrowing 10,000 kwacha, 2,800 plus there, before even I put in insurance and arrangement fees, always has to be going back. And so banks now prefer dealing with government in terms of T-bills and bonds. Even the big firms now, like pensioners, the NAPSA and all, are investing into roads and toll gates. It comes back to the small businesses. I cannot borrow because it's too expensive. How do we invest?
Yeah, absolutely. And I think you touched on a very, very important aspect of the financial system. I think the financial system in Zambia needs to be realigned, because what you see is that all these banks are making money out of, just buying T-bills and, securities with the Bank of Zambia. And I think there was an incident where I think money that was meant for CDF was then put into Bank of Zambia in securities, and then the banks got a return. But going back to your question in terms of where do we see some of this growth, I think what we've adopted for ourselves through the decentralization policy, I think, is grassroots growth. And I think so there's quite some money to be exploited by small businesses in the CDF, which has gone to, is it 31 million now? So I think there's quite an avenue there in terms of small businesses to try and exploit that area in terms of growth. And I think there was a concession also, I think, a waiver on solar products as well by the government. So I think, in all fairness, I think it's going to be a difficult work, I think, for both the government and the business, small businesses, because of the taxation that is coming in. But I think it's inevitable. We can't move this economy, Costa, without us paying, the fair share, all of us, to ensure that we are running this economy sustainably based on domestic revenue and not external revenue.
Away from, the issue of GDP, the budget in 2025 projects to reduce or has a target inflation rate of about 6 to 8%. We are interested in this inflation because it's really the parity between the availability and the cost of these goods. We are a net importer. If you walk into ShopRite, you walk into Pick and Pay or Choppies, most of all these products you find are not being manufactured here. We're importing our cornflakes or whatever from South Africa. And so the exchange rate will factor into here. The fuel as part of transportation will factor in. The rentals of these malls will factor into here, adding towards this price. But as an economist, this is a projection. How realistic is it that we can hit single-digit inflation? But apart from just saying it's 6% inflation, do you see these targets have a real reflection that the cost of meal, the cost of bread will come down?
No, I think the single-digit inflation rate, I think, is quite ambitious. I don't think we can achieve that in 2025. And I think it's given the factors that you and I have discussed on the table today. If you look at the drought, the energy crisis that we are facing, I think the rains haven't been that good, right? I do small holding farming, and you can see that really we're a troubled country when it comes to the drought. And so 55% of the inflationary pressure was coming from food, right? So that's not going to be possible for us to achieve a single-digit inflation rate. Now, I think one area I think that we need, you talked about us being a net importer, right? So one of the areas that we've not exploited very much is this, local content ID. I think it expired, should be in 2022. I think ZDA is trying to revise, come up with a new policy on local content. So what we need to do as a country is basically import substitution. We've got to make sure that some of these products that we get from South Africa and other countries, we then start producing them locally here. And that's what the local content policy should do. It should come up with, go on the import bill and say which of these commodities, which of these products can we then incentivize our own people to start producing or to ramp up production in areas where, there's not much. And I think you saw in the budget as well, I think non-alcoholic beverages, I think were given, I think, a 1/4 increase in terms of, the tax. I think it's tried to protect, the companies, I think, that are obvious that you know that are in that space. But I think we need to do that in a bit more aggressive way. And I think that's where the global economy is going. If you look at the, Americans and, President Donald Trump, that's what they are talking about, because you've got to make sure you sustain your own economy within your own means before you go outside. And that also has an impact on all these other areas, because if you talk about things, for instance, like our monetary policy, the central bank, the impact of their interventions have not been really giving us results. Part of that is because you don't have a watertight economy, because the assumptions that you make in those interventions is that you have a proper, real, economy going on. But then you do all these interventions on an economy that is broken.
Finally, for the Zambians watching out there, what should they be expecting for 2025? I mean, at the beginning of every year, people are hopeful, coming out of a very tough, 2024. Are there any pointers? Are there any policies? Are there any economic indicators, apart from these projections that are not cast in stone, that the cost of living will fall? I was looking at projections in the Economic Intelligence Unit report that obviously predicts that before an election year, parties in government will begin to sort of do things that plays on political sentiment that may not be in the real economy. But do we see maybe that in the in the last half of 2025 going into 2026, that maybe, just maybe, subsidies or fuel will go cheaper, trying to pander to political sentiments?
Yeah, I think that's been the problem in terms of, and that's what we discussed earlier, remember, about the incentive structure of, the politicians. But I think it's my hope that this government won't then, fall trap to that kind of, decision making that is based on political rhetoric and trying to gain some, political mileage. I think they've been very consistent in terms of policy, so I think we stay the course that way. In terms of my fellow citizens out there, in terms of 2025 and how it's looking, I think we have a hope in ramping up production in our copper, copper sector, mining sector. But I think what's important there is not really that we increase copper production, but what we do with that increase and the returns that we get from there. I think adaptation to climate change, I think, is quite exciting as well. I think we are seeing quite some innovations coming in there. And I think, like I said, I think all of us are entering 2024 in a different space. Small businesses, to the most part, are entering 2025 in a very different space than they did 2024. You see people now starting to use solar products and, try to mitigate for the adverse impact of climate change. But I think to a larger conversation on taxation, I think that's going to be very, very difficult work for all of us, because the taxes are then burdensome to all of us. But there's nothing that we can do without, us paying for our own, expenditures, our own consumption. We've got to make sure we pay for that. That then prevents us from borrowing money.
Will life be better? Will bread, meal, milk and sugar be cheaper? Petrol?
We're on a path to a better, I think, economy. That's what I can say. I don't think it's going to be, there's a silver bullet that we have currently, but I think we're in that direction. And I think if we stay the course, make sure that we fund our own expenditures, we invest in the right places, we also protect the vulnerable, I think then we're in the right path towards a prosperous Zambia.
Dr. John Musantu, thank you so much for coming through.
Thank you very much, Costa.
We've been discussing Zambia's economic outlook for 2025. My guest, Dr. John Musantu, is an economist, a researcher, and obviously plays an advisory role. He has a PhD in economics, a Master's of Science degree in economics and finance. He's been my guest. Thank you so much for watching. Remember, you can catch the stream on our Facebook page. It's Diamond TV Online, as well as Diamond Media Zambia. Have a very, very positive outlook to your 2025 economic-wise Zambia. Thank you so much. Good night.
Costa was brought to you by FQM Trident Limited, a subsidiary of First Quantum Minerals Limited.